and action.
Hi, good evening everyone. We are here to present the valuation for Goldman Sachs to make you believe that it is a real buy. I have my colleagues Edward and Edison with me who will prove that point to you within the next 10 minutes. So the recommendation that we give for Goldman Sachs is a buy. The intrinsic value that you can see here is 311.95, which I'm very sure appears to be very aggressive to all of you, but in the next few slides, we'll make sure that you'll agree with us too. Going to the presentation, we'll go down to the background of Goldman Sachs, the financial conditions, the stock valuation, and finally the recommendation. Talking about the background about Goldman Sachs, it is a public company which was founded in 1869 with its headquarters in New York. And its primary industry is banking and financial services, which has got more than 32,000 employees throughout the world. It is traded with the name GS on NYSE. The point of consideration here is that in 2013, it was one of the lead underwriters for Twitter's IPO. Also, it was Apple's largest corporate bond deal lead together with Deutsche Bank, which was for $17 billion. Next comes up, we see how the services which are provided by GS and how it earns its revenue. As you can clearly see here, GS earns majority of its revenues from institutional client services, and then goes the chart stating equities, asset management, investment and lending, and the others. Coming on to the leadership, we see a very aggressive leadership group here, a majority of them being from Harvard, Columbia, and other Ivy Leagues. One point to be noted here is almost each of them has got more than 20 years of experience with GS, which is really valuable for the firm. Not going into the details of each one of them, but pointing out to Mark Schwartz, you see that he was one of the rare people who was called back to the company after he had left in 2001, which had been a really important consideration for the firm. Next, I have my colleague Edison, Edward, who will be taking on to the next slide.
Thank you. Now this is our SWOT analysis for the Goldman Sachs. And we can see the strength is leading the position in the global banking and capital markets industry, providing a competitive advantage. And for the Goldman Sachs, there are some places need to improve. Exposure to distributed sovereign and non-sovereign in this case, and potential losses. And for the opportunities, launch of the internet banking operations are likely to broaden funding base. And for the part of the trades, increasing regulatory challenges could increase the compliance risk. And for the financial condition, we compare the Goldman Sachs and the JP Morgan and the industry. And for the net profit margin, Goldman Sachs is 23.4%, and compared with the industry 9.4%, is very good. And for the ROA, Goldman Sachs is 0.9%, and compared with the industry 0.7% is average. And for the ROE, Goldman Sachs is 11.2%, and compared with the industry 8.3% is good. And debit to the equity, Goldman Sachs is 2.3, and compared with the industry 2.1 is average. And interest coverage, Goldman Sachs is 2.9, and compared with the industry 3.2 is average, and overall is average. And the PE Goldman Sachs is 11.3, and compared with the industry,
just kind of don't go through the numbers. Just talk about them and move on.
Okay. And
please.
We can see the growth of the revenue and operating income. Goldman Sachs is good, and the other they are below to average.
Thank you. Sorry, didn't mean to cut you off.
Thank you, Andrew. So next part, I'm going to show you guys how we get the intrinsic value by using the 4 methodologies. So the first methodology we use is the Perpetuity model. So as a Perpetuity model, we use is first we get the 2015 expected earnings per share value. So it is 18.5. Then we divide it by the return on equity. For the return on equity, we use the risk-free rate from the 10 years Treasury, 10-year Treasury US 10 years US Treasury bond rate. It is a 1.92%. So then finally we got value is 205.56, which is very bigger than the current price value. The next methodology we use is the golden growth model. So the result we got is 308.3, which is very significantly bigger than the current price, 194.89. So the third methodology we use is a multiple approach. The price is we use is a PE ratio. So the PE ratio we expected 2015 is 12.07 multiples. And for the earning per share in 2014 is 17.07. So we expect the growth rate should be 8%. So the final result we got is 222.09, which is still bigger than the 194.89 current price. The first methodology we use is discounted cash flow model. So we generate the cash flow of the earning per share from 2015 to 2019, and we expect that after 2019 the growth rate should be 2% because we are very conservative. So for WACC we got is 4.56% because we are a little bit conservative. So the final result we got is 387.88. So maybe it's very significant, bigger than the current price, but we use weighted stock valuation. So final result we got is 311.95, which is significantly bigger than the current price, 194.89. So we recommend buy. So here we will make the conclusion.
To support the recommendation of buy with such a high value of 311, we actually went into a more detail of seeing how could GS actually touch its all-time high intrinsic value. Since the intrinsic value calculations are based on discounted cash flow intrinsic value, cannot be applied to companies without consistent revenue and earnings. We did a little more detailed research and developed a valuation model on normalized discount cash flow and book value of the company. So during the past 13 years, we noted that the highest price to intrinsic value, that was DCF projected ratio of GS, was 0.97 and the lowest was 0.47 with a median of 0.51. Seeing a median of 0.51, we can totally expect that the intrinsic value can go as high as 311 in near future. So therefore we recommend to buy call options, right put options, buy GS stock on margin, buy GS financial service on margin, buy call options on financial service ETS, and finally right put options on financial service ETS. Thank you.